Hey folks, CB3 here with your weekly market update. I'm the portfolio manager with CB3 Financial in Chicago. It was a busy week marked by cautious trading, tariff headlines, and central bank watchfulness. That means the Fed had the opportunity to lower rates and they didn't do it. So investors are now watching for new economic data this coming week. It's going to be busy. Stay with us. CB3's weekly market update begins now. U.S. indices ended the week slightly lower than last week, breaking recent winning streaks, and it's not a really big deal. The Russell was slightly up, but the Dow, the NASDAQ, and the S&P were all somewhat lower. S&P down 0.5% on the week, Dow Jones down 0.2%, NASDAQ down 0.3%. Really pretty quiet trading when you think about the volatility that we had in April and the first part of May. So most sectors were trading sideways. Energy outperformed. Technology stocks notably did pretty well, like Tesla and Nvidia, which experienced sharp moves midweek. So the week began with tariff anxiety. Well, we've been having tariff anxiety, really, so I don't know, but it began with that, but it's just been ongoing, all right? And he announced 100% tariff on foreign films. It means if you want to shoot a redo of The Hills Are Alive with the Sound of Music, you can't go to Austria to do that. And I mentioned this in my show Thursday night. If you guys watch that, I have a little more explanation and some graphics there. But that rattled the markets, and it certainly rattled the Indian market because 40% of their films revenue in their industry comes from the United States. But despite these initial declines, sentiment improved toward the end of the week. We had a little bit of an up move, but not enough to overcome the early downtrends of the week. So overall, a soft downturn, but we've had multiple weeks that were positive. So investors remain focused on the upcoming trade talks with China happening this weekend in Europe. I expect those talks to happen, and we should be able to report that to you early next week, probably on another podcast. The Federal Reserve kept interest rates steady at 4.25 at a half, which means 4.25-4.5. It's always a range now for the last 4 to 5 years during their Wednesday meeting. And when Jay Powell came out, he didn't do anything that rattled the market with his commentary. Sometimes he does, even if there's no announcement of a rate change. Sometimes his commentary can rattle market participants, but it didn't happen this time. So what is the sentiment? The week marked the tail end of the earnings season. Now, I still see about 110 stocks left to report in the S&P, meaning that 390 have reported. And if you watch the very end of segment 1 on my show Thursday night, you'll see the chart that shows that we're really looking at an average quarter of earnings report. So about 74% are beating expectations. The average is 73%. So any way you look at it, that's an average quarter return, which given the geopolitical angst, I think is a very strong positive. So based on that, S&P rebounding sharply from April's tax-induced lows, traded at an 8% discount to fair value. That means that the S&P is beaten down because short traders have pressured it down and it's undervalued. So I expect this next week could start with some upward momentum. Our programs are fully invested. Now, I have said in previous episodes that starting this month, we're not going to talk about our investment programs. We're going to have a separate segment for our clients talking about CG, which is capital growth, GI, which is growth and income, and DS, which is discretionary strategies. So stay tuned for that if you're a client. I'm limiting these market updates and the monthly updates just to talk about my opinions on why I'm trading the way I am. So the public perception during this administration's focus on trade and economic nationalism, Trump's approval rating has been mercuric, up and down, with only about 36% of Americans expressing confidence in how he's handling these tariffs. I don't think that's fair because this is a radical transformation from a nation, that would be us, that has had significant trade imbalances for 5 decades, going all the way back to Dwight Eisenhower. And he wants to change this and level the playing field so American manufacturers and American workers can stack up equally against the rest of the world's workers, the rest of the world's corporations, and the rest of the world's sectors, and compete equally across the board without tariffs. He is stating that he believes he's going to have a 10% tariff on all countries until further notice. And I think he's using that for a little bit of leeway. But the first trade deal was cut this week, as you heard about it. I announced it on my show. Great Britain, so that's a start. China is in beginning talks. They're going to be the last ones, folks. It's going to be Thanksgiving, in my opinion, before China signs a deal, and maybe not even then. But if the major European countries and the major Asian nations, that would be Thailand, South Korea, and Vietnam, if those settle with the U.S., then China is going to have more and more pressure to make a deal. So if I slow down and think about this for a few minutes, the S&P's break with its winning streak, remember we were just softly lower this past week, and subsequent choppy trading reflect a market grappling with both technical resistance and fundamental uncertainty. But the technical resistance is we are about 4.5% off the lifetime highs, and the Russell is off more than that. While the index remains above short-term indexes, long-term resistance remains ahead of us, and we have to get through that if we want to get to new lifetime highs, which I do expect this year because we will get these trade deals done. So Tesla and Nvidia, both stocks saw significant gains midweek. Tesla was up, breaking out on high volume, and Nvidia surged over 3%. So that's positive, but Apple remained under pressure, and Google gave back 5% when it was announced that Apple is now going to have AI in its Safari browser. So that's actually good for consumers. It's leveling the playing field with more AI being brought into market players of the Mag 7. So obviously for the week ahead, the most important item is happening this weekend. Investors will be closely watching the outcome of the high-level discussions in Geneva, Switzerland. Now this is really going to be, in my opinion, just an agreement to stop the tariffs. And China's going to say, we can't even negotiate with you until you stop the tariffs. And Donald Trump's not going to do that. So China's going to have to figure a way to negotiate with the tariffs in place. We're also waiting for CPI, so that's the Consumer Price Index. This will be pivotal data for the Federal Reserve as far as their policy path going forward. If it's a hotter than expected reading, meaning that inflation is continuing to increase, then that's going to dampen hopes for any rate cuts in the near future. I'm expecting one not in June, but in July. And that would be very positive for the market because we could see a rate cut in July and then in September and then another one in November. All of that would be fantastic. So on the Trump watch, expect continued headline drama from the White House with further tariff announcements and trade deal headlines likely to drive short-term market swings. That has been the chief instigator of the volatility we have been experiencing since April 2nd. It's all about the tariffs. Notice nobody's talking about Doge, and yet Doge continues to work in the background, reducing the headcount of federal employees. So for me as a portfolio manager, I am fully invested in all of our programs. I am prepared, though, to go back to cash if necessary in our aggressive growth and even our growth and income program if I see a reason to do that. Right now, the bullish momentum is in our favor, even though it's not a strong bullish momentum. The bears have not been able to take this market down to challenge the previous lows in mid-April. So expect continued headline risk from the White House with further tariff announcements likely driving the short-term market swings. Trump's economic policies remain central to market direction. That will not change until we start seeing several trade deals with big players, which then incentivizes the Chinese to get in there and make a deal before the one that they make ends up being a much worse one than they could have made a month earlier. That's where we are on Saturday, May 10th. Stay with me. If anything significant comes out of the Switzerland conversation with China and America, I'll update the podcast. If not, I will see you next Saturday. Remember that I tweet every single day, usually multiple times a day, and I would invite you to follow those and be ready to watch our monthly market update. The next one will be Thursday, June 12th. God bless you guys and have a great week ahead.